There we go. Alrighty, so thank you for logging in. I've got Geneva, if you'll like moderate this for me, because I'm gonna make my little GoToMeeting thing smaller. Pretty soon I'm gonna bring you in, so we're gonna switch presenters so you can go through. And if something happens that you're not seeing the screen, let me know. Wanted to do a quick introduction of myself. I started off as an appraiser in 1996. Geez, man, that's like a long time ago now. I became a mortgage broker in 2001. 2009, I was a national foreclosure prevention counselor. And fast forward, I used to do document examining, meaning those little papers that we have to go through all the numbers at the very end. I would be an expert witness for attorneys if those numbers were off. So, I mean, bottom line is I pretty much spent my entire life in one facet or another in the real estate business. So, that's just a little bit about me. See how this works? The next is Miss Geneva Holland. So Geneva, she spent the past 6 years working with home buyers in all stages of life. And she actually didn't put this in here, but I'm going to add, she has experience in the foreclosure prevention side as well. She's been active in coaching cheerleading for Plant High School and co-founding our nonprofit, the Heroes Housing Assistance. Actively working every day with Heroes in educating secure, affordable housing. And she's with the mortgage firm, and this is her phone number and her information if you'd like to get with her. I'm going to bring her in, like I mentioned, in just a moment. I'm going to start it and kind of talk about the process, but, really, these are the steps in the homeownership process. Really, you start with Geneva. Actually, you start by you just making a decision. To become a homeowner, it's probably one of I think they say it's like the 3 top stressors out there. Let me move this panel over. I don't know how that happened, and I apologize. Let's go back from the slide. Geneva, I'm going to unmute you if that's okay. Are you there?
Yes, I am. Hello.
Way easier. Hello. So, like I was saying, it's so much nicer to have somebody in here that I can talk with. Making the decision to buy that house is probably one of the biggest decisions. And, you get to look at these houses and you fall in love and you want to go see this house and you're ready to go look. And we as realtors, at least send me a text when you're ready, because I don't see that you're able to unmute you. So I just want to be able to unmute you here soon so that you can kind of talk about your experience. But the first thing that we go to is, I would say, have you been pre-approved? People are like, huh? So, there's a couple of things, and this is where Geneva is going to come in. But from my standpoint, I don't want to set up a home search and have you go look at a $600,000 house when you're approved for a $300,000 house. And it's very hard to unlook at those 600,000 and be happy with those 300. So if we know exactly where you are, then we can go from there. That being said, you could want to keep a payment of 300, but yet you're approved for that 600. But that does not mean you want to pay that mortgage payment. So this, I wanted to let Geneva kind of talk about that. What a pre-approval process is. Geneva, did you want to switch screens, or did you just kind of want to talk through that? Because I know you have a PowerPoint as well.
Yes, I have a presentation if you want to go ahead and switch screens.
Okay, perfect. This is going to be a new one for me. Here we go. Yes, I'm going to make her presenter. Dun, 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 dun. Okay.
Okay.
Whoa.
All right, so basically what Scarlett was saying is exactly true. I think that financing, and I may be a little biased, but I think that financing is a great place to start with the home buying process, so you can figure out where you stand and what your budget is really before you go and get your heart set on anything. So the main thing that you do when you talk to a loan originator or someone at the bank is, you know, where's your pre-approval letter? That's where the realtors want to know, and that's what they're looking for to see what you're approved for and how they can set up a search for you. So really there's two things that you can do. You can do a pre-approval or a pre-qualification, and it's, you know, there's two different things and the terms sound very familiar, but really, you know, there's a different qualification for the two of them. So a pre-qualification is kind of the starting point to the pre-approval. A pre-qualification is getting an application together and ultimately pulling and reviewing your credit report. So as a lender, we take a look at your application and we review you and we can pre-qualify you based off of the information that you provide. So on this application, we're looking at your assets, your income, your credit, your any sort of liabilities that you may have that are either disclosed or undisclosed on your credit report. So that really becomes a line of communication more than it is a yes or no answer. And ultimately, it's setting up a monthly budget that's going to work best for you. So that's going to be on any application that we're looking at. So pre-qualification, it's really just reviewing and it's going off of what your word is as a buyer. A pre-approval is the next layer, the next step to the process. And this is really what your realtor is looking for. And as realtors, this is what you're looking for in a client. And ultimately, this is what the listing agent who is protecting their seller is looking for. The conversations that I have, and I typically try and make them, is that phone call over to the listing agent or the listing agent calling me to confirm this buyer that I'm working with, you know, what do we know about them? Before their seller takes their house off the market, they want to make sure that this is a pre-approved buyer. So not only are we going off of their application that they provided, we're reviewing their credit, same as pre-qualification, but that we're taking it one step further and we're actually reviewing the documentation for the loan process. And then there's one step that I didn't include on here, but at that point, we're also running you through an automated underwriting system. This is different than the underwriting system that we go through later on in the process, but really this lays down pretty much your ground rules for what that underwriter will or will not be looking for in your loan. So ultimately, the pre-approval is more highly sought after by listing agents because they do want to confirm that you as the buyer have done your due diligence to properly be approved and that you are ready to go under contract. So that's pretty important to, hi Tanya, thanks for joining us. We're just getting started going over the difference between pre-approval and pre-qualification. So that's really what your listing agent is going to want to see is that, you know, you've taken that extra step to provide the documentation that your loan officer is asking for. And that's the loan application, or those are the loan documents that your underwriter will be reviewing once you are under contract. So those are the kinds of questions when I speak with listing agents, just as they're reviewing offers on a home. That's exactly what they ask. Have you ran a tri-merge credit report, run them through some sort of automated underwriting system and reviewed documents? Any questions so far?
So, Jenny,
Sure.
can you hear me?
Yes.
Okay, so you mentioned when the listing, so can you kind of explain that? Because I know as a listing agent, I just had different offers And it's really, really important. You know, lots of times you actually help sell our clients, correct?
Yes, so I do my best when I know I have a client making an offer on a particular home. And I do this for any client if I have the opportunity to. But ultimately, when I'm working with realtors or if I have that line of communication continually open with my client, I will call that listing agent for the house that they're making an offer on, and I'll let them know, hey, we've done our due diligence. We've reviewed documentation, we've taken a look at their credit. You know, maybe there's something on their credit that we needed to do a minor repair and we've gotten past it. Or, you know, we've gotten ahead of the game and we know this, and this is going on, and, you know, this is what we're working with. Your buyer has this type of loan program. They may be available for this as well. It just sounds very reassuring to a listing agent, especially when the listing agent's working on behalf of their seller. I mean, that's a big deal to take their property off the market for 30 days, especially in such a hot market. You know, they want to make sure that they're really and truly a qualified buyer. So yeah, definitely. I'd love to call the listing agents and let them know, you know, where we stand currently with our approval status as a buyer. Did that answer your question?
Yes, it totally answers my question. Did you have another slide that you wanted to go do, or did you want to switch it back?
Yeah, I have a few. Well, I guess I'm not. How about this? Can I go ahead and go through mine?
Yep.
And then we'll, is that okay?
Yep, that's perfect.
Next I was going to talk about, kind of ties in what type of loan documents we need for the process. So this is the difference between the pre-approval and the pre-qualification. And depending on your loan type, this definitely varies. And I'll go into that a little bit more on my next slide on how that can vary. But ultimately, the very basic and generic documentation that you should be expecting to provide is 2 months worth of bank statements, 2 of your most recent pay stubs, and your past 2 years W-2s and tax returns. And ultimately, any additional asset documentation that you're planning on using for the closing of that home. So whether those funds are coming from a 401k or some sort of additional savings account, maybe it's a money mutual account, whatever that may be, this will be needed for the loan process if you are planning on using those funds. And then also a copy of your photo ID, because we have to verify who you are because of the Patriot Act. My next slide, so I was saying there are some additional documents needed for loan-specific programs. So typically for a bond loan, we will need an additional year of tax returns and W-2s. For VA loans, a copy of your active service letter or your DD-214, which is your departure of service letter. For gift documentation, I'm not going to go into too much detail about this, but say mom and dad are giving you a gift for your down payment or your closing cost, or maybe some other close and very generous family member is planning on giving this to you. We will need a gift letter and that asset statement of where those funds are coming from. Another hot topic we have right now is our first time home buyer conventional loan program. That is going to ask for your school transcripts if you are not seasoned with your employment history. So when I say seasoned with employment history, I mean we typically have to have 2 years worth of employment history. But the good news for this conventional program is if you are a new graduate, congratulations, we will require your school transcripts and we can use that in lieu of the employment history. So yeah, that's pretty much the documents needed for the loan process. I think I can hold off on there if you would like to take it back over, Scarlett. Sorry, we should have reviewed what it was I was covering.
Okay. I couldn't find where to unmute myself. Sorry about that. Okay, so now that's awesome because I think a lot of people don't know exactly what they need. And I love this new program you guys have about the school transcripts. I was just having that conversation just yesterday with one of our realtors who happens to be also in college, who's graduating, and we're setting his goal. And I said, well, wait a minute, you don't actually have to wait 2 years. I could be wrong, and you tell me. If you graduate next January and that is your degree, and you've gone into that, you could use that as part of your 2-year history. Is that correct, Geneva?
Commission is different. Yes.
I
Yes, that is different.
That is why we go to the lender and not me, because I just gave bad information. So that's good to know. So if it is a salaried position,
Yes.
you can use your transcripts.
Yes.
Very cool. Very, very, very cool. Okay, so I'm going to figure out how to take the screen back, and then I'll give it back to you shortly.
Real quick, I have some information regarding credit. Would you like me to continue?
Sure.
It's more, my slides are mostly about the pre-approval process. Should I go ahead and finish up what I have?
You know what? That would be great, because then from there we'll go into the buying process. So yes.
Okay. Awesome. So I'm going to go ahead and finish up. So we talked about the difference between pre-qualification and pre-approval, and we went over the documents that take you to the pre-approval. Ultimately, there's a few things that we look at. I'm not going to go into too much detail of all the factors, but I did go over it briefly. Income, pretty straightforward. Assets, again, pretty straightforward. However, credit, that is one thing that I get lots of questions on. And luckily, we have someone that we work with who I believe is on the call, Sonia, who has been a great referral source for us. But in the meantime, up front, I get quite a bit of questions about, is this true? Is this not true? So ultimately, you do have 3 credit scores, and that is given by each of the bureaus. So that score is not technically the same for each bureau. We go by the middle score. So say you have a 580 TransUnion, a 640 Equifax, and a 780 Experian. We would go with your 640 score, because 580, 640, and 720. 640 would be your middle score. That would be your loan mortgage credit score that we would be able to use for a transaction. Also, a lot of people, fact versus fiction, a lot of people say, and it's a great conversation point when I'm talking to people, do you know what your credit score is? Some people are completely unaware of what their score may be, but other people use monitoring systems, or they've checked their credit score somewhat recently, so they may be familiar with what their score should look like. But just because you are seeing a certain score on a credit monitoring program, that might not necessarily be what your mortgage credit score is. Typically, there's I guess I should say typically, there's different algorithms that are used to calculate your scores. So what you may have is a credit score. If you're going to apply to Rooms To Go for new furniture, they may pull one score for you. When you're applying for a mortgage, that score is calculated a little bit differently than the credit cards would be. So those do vary on who is and what type of pull is being pulled on your credit. And then also, one thing, it's a question I get over and over again, I went down to my bank and I was talking to my bank, and I'm afraid to have my credit pulled again. Well, we have Regulation X, a part of RESPA, and this allows you a 30-day window to shop for a mortgage. So when you do your hard pull down at, whatever ABC bank it is that you went to, you then have 30 days to shop around for a mortgage. So you're not locked in with anything specific, or it gives you the opportunity to be an informed consumer is really what that is. So you're not getting that negative effect over and over again for every hard pull. The window is 30 days for that shopping, so to say, but that does go without mentioning that sometimes, people's credit scores do vary. So if you have very volatile credit, that is something that needs to be considered, because you don't want to pull your credit score multiple times. If you have an established credit, multiple lines of credit and accounts that you've had open, I don't think that would necessarily be the same case as if you have maybe 1 or 2 lines of credit open and, you pulled your score a few months ago and maybe you were at a 680, and then you pulled your score again for your first mortgage application, and maybe it dropped down to a 640. That 40-point difference within just a few months when you're making continual payments, that would be an indicator of volatile credit. So those are a couple of things to keep in mind. On to the big questions. What loan programs are available? Oh, real quick, I'm going to pause. If anyone had any questions on the credit, or I know we kind of blew past the pre-approval, pre-qualification, but just if anyone had any questions, feel free. I am getting those messages on there.
Okay.
Yeah.
Sonia Taylor and Sonia, and I will say personally, she is a phenomenal resource for credit. I will put her information in our webinar information at the end. She's personally pulled my credit score up 100 points, so I'm a firm believer in her. She said the mortgage score uses FICO 2 and FICO 5. That's a different thing that they're doing. Wouldn't you agree now, Geneva? I mean, I never saw this in the past, but I guess now they've got all kinds of different types of FICOs. So I think, I know when I went to go look at cars, my score was one thing, but for mortgages, it's another thing. Is that correct?
That is correct. Even the FICO 2 and FICO 5, that is even over my head. So I think Sonia has even more information to offer us for that. I think we should definitely do a credit webinar to focus in on that a little bit more. So I think lots of people have questions.
That is
on credit.
Maybe we could add that. Start doing this once a month. Bring her in, because that would be phenomenal. I had a question. How long is a pre-approval good for? Someone just asked me that the other day.
Sure. 90 days.
Okay. Now, okay, that's all, because someone had just asked me that, so perfect. I think I don't see what you can do is if you want to ask, put a question in the chat box, and I'm scrolling through, because if I unmute everybody, it's going to be so much echo in the background. So if you want to put a message in the chat box, I can read it over to her. But it looks like we're good so far. So if you want to keep going, Geneva, we should be good. We're up to 7 attendees. I'm pretty excited.
Hello. Awesome. All right, loan program. So this is where I spend most of my conversations with people, aside from budgets. Loan programs, what's available? FHA conventional, VA, and USDA. Now, I listed on here down payment assistance and the Florida bond loan only because I get quite a bit of information or questions on this, and I'm constantly giving information about it. But I gave more information on my following slides for the top 4 loans. Those are actual loan programs. So FHA credit score, and keep in mind, I'm going over very generic information. We do have additional loan programs available that goes below these credit scores, and we do have different guidelines, but this is a FHA, a true FHA loan without any additional pricing, or when I say additional pricing, that's when we're looking at maybe subpar credit, the pricing goes up. So this is, Joe Schmo home buyer wanting to buy a house. This is what I talk to someone about. If a situation arises where we need to look at other options, we have those available, but for the sake of our talk today, I just wanted to keep it very generic. So 640 credit score is what we're looking for. 3.5% is the minimum down payment. You can definitely put more down if you would like, but that is the minimum requirement, which is typically why FHA is a more attractive loan option. The mortgage insurance is 0.85%, and that's included for the life of the loan. So we'll talk about a couple of other loan options here in the future, in the near future, but ultimately, yep, that's also one of the points why people want to look at conventional loans. Not everyone wants to pay mortgage insurance for the life of their loan. Also, FHA, it is, in comparison to other loan programs, it is the lowest or lower, I need to correct that, can't say it's the lowest, it is the lower and more affordable of interest rates in comparison to conventional loans. Also, most condos are not improved by FHA investors. So I do have a lot of first-time home buyers who are interested in condos. Ultimately, that's not something that we can do for an FHA loan. So I just wanted to add that in there. Townhouses and villas, that is different. Little planned urban developments, that is different as well. So just because you have an HOA does not mean that you cannot do an FHA loan. That is not the case. But I'm talking true condos. Those typically, I think there's only 3 in Hillsborough County that's actually approved by Fannie Mae and Freddie Mac. Any questions on FHA loans before we continue?
I do not see any questions
Okay.
so far on FHA.
Perfect. Conventional loan. Again, we're looking at 640 credit score. Conventional loan programs, unless you're a first-time home buyer and you're able to put the 3% down, typically 5% is what's required. That's why we see more people leaning towards the FHA, not to mention that the interest rates are a little bit more and the cost is a little bit more for a conventional loan. Ultimately, a huge selling point for a conventional loan is people who are putting large amounts down. If you're putting 20% down on your home, then you do not have mortgage insurance included in your home. Or if you put 22%, you make your monthly mortgage payment, and however long it takes you to build in that 22% equity, that mortgage insurance will drop off naturally. With that being said, it's a good opportunity for you if this is going to be a long-term home, is to, not have to worry about refinancing later on. That mortgage insurance is going to be dropped. Ultimately, with conventional loans, it is more favorable with receiving discounts on your interest rate with good credit ratings. Now, I pointed this out because this is very different than an FHA loan. FHA, it's very hard to see a difference in pricing and discounts based off of credit scores, but this is where we do start to see where a conventional loan is more favorable for borrowers who do have excellent and great credit. Good credit, you will start to see a discount, but it's really at the great and excellent credit marker that you start to see that to be more cost effective than an FHA loan. Ultimately, condos are allowed. Limited and full condo reviews are available for a conventional loan. So I did not go into too much detail about the Home Possible. The Home Possible, that is where you only put the 3% down. This is what is available for first-time home buyers. So if you have not owned a home in the past 3 years, this will pertain to you. A minimum down payment is only 3% for the Home Possible conventional loan. There is a class that you do need to take for that. It is available online, so it's pretty easy to access. And also for this Home Possible conventional loan is where we're able to take your school transcripts in lieu of the work history. So that is the gist of a conventional loan. Hi, Lynn, welcome. Does anyone have any questions on conventional loans?
Let me look, but you know me, I've got questions. Sorry, Miss Geneva. Actually, I did want to welcome, we have a couple of our realtors in the house, which is pretty exciting. We have Tanya Fernandez, who just joined us, Evelyn, and Evelyn, bless her heart, she just got back. She just flew back into the country, and she's here, and Lynn Padilla. But I do have a question on this. Did something just change? I just saw, I think you may have sent an email, something about the condo reviews. Is that conventional? There have been some changes recently?
Yes. I actually, I'm planning on putting out some information later this week. We're at Wednesday already. I will have some information going out regarding the changes in the condo reviews. Hi, Evelyn. Welcome home. I hope you had a good trip. The condo reviews, yes, there are some changes. I'm sorry. I'm so deep into the gist of these different loan programs that I'm drawing a mind blank right now. Ultimately, the type of review that's needed for the ownership is the big play. So I believe it used to be someone could not own more than 15% of the condos in a single condo. However, now it's gone to 25%. So yeah, they're definitely opening up the lending policies for the condos, which is really good.
Yeah,
and trying to make it more limited.
I think I lost one year for that, so I'm excited now that we can go back and start making condos a thing again, which would be nice. They had made it so hard to be able to get into some of these. So, okay, I don't see that we have any more questions on conventional. So if you want, I'm going to mute myself again so you can go back to the next one.
Awesome. All right, so I did a combination for the VA and the USDA. These are two different loan programs, but they do have some similar information. Their selling point for both of them is they both require 640 credit scores, and they also both have 100% financing available. So if you are looking in a rural area, this is a great option for you. Also, if you're a veteran, this is the best option for you. And I say that kind of blindly looking into a situation because I guess you can't really put that on everyone. But ultimately, the VA program, I mean, their rates are extremely competitive in comparison to any other loan program that we have currently. And I mean, it's great. It's 100% financing. Ultimately, though, for the VA loan, they do have a funding fee. So that's one thing I talk about to my clients, and they're like, there's no mortgage insurance. I'm like, yeah, there's no mortgage insurance, but there is a funding fee. So I think that's kind of their capture for the loan. However, if you do have your entitlement and a certificate of eligibility, that will determine what your entitlement looks like, meaning how much funds you have available to purchase. And also it means if you are disabled, that you may have a funding fee exemption. So that could potentially mean that you do not have to pay that funding fee instead of that being rolled into your loan, which is really great. So definitely consider VA a loan if you are a veteran or if you are active military, because I think that's a great option to use if you have that available. USDA, this is only eligible in rural areas. Ultimately, I do not know all the areas off the top of my head. I'd be lying if I said I did, because it's even zip code specific. So there is a link on the USDA website. I would be happy to share with anyone who is looking. However, I do try and look at other loan options for my buyers prior to a USDA loan, only because, those interest rates do tend to be a little bit higher. Yeah, so it is a little bit higher. So I do try and see other options, but you know what? Sometimes a USDA loan is what works best for a client. So I would never say no. I would just explore options if available. Does anyone have any questions for those two? And these are both government loans, government secured loans. Yes, Evelyn, what is your question?
Here, actually, do you want me to unmute you, Evelyn? Let's see if I can. Oh, she's self-muted. Shoot. Evelyn does a lot of, Evelyn, Lynn, and Elise seem to do a lot through our Heroes Housing. She is someone that already used it. Oh, okay. So Evelyn has a client that has already used their VA, and they want to use it again. So
Yes.
how does that work? Do they have to pay the funding fee again?
So yes, if they're planning on, if they have their entitlement still eligible for them, they will have a funding fee that they will have to pay, unless they are, you know what, that's the catch. If it is a second home, then they have to pay the funding fee. But yep, that's what I was getting to. So he is disabled. So he would be exempt from the funding fee on a primary residence, but if he was using his VA benefit and he had entitlement left over for a second home, then he would have to pay the funding fee for that second home. However, tell me if I'm going too fast or in a different direction. However, if he has a home currently with a VA loan, or maybe he's already repaid that loan back, and he's planning on purchasing a new home, and this will be his primary residence, and he is disabled, and he is granted exemption from the VA, then no, he will not be required to pay a funding fee. Ultimately, we can verify this on his certificate of eligibility. We can order that for him, or he can call the VA's office and he can get a copy of that, or she, and we can get a copy of that. So their certificate of eligibility will say right on the form what funds you have available, what funds have been exhausted, and it'll also say whether or not you're exempt from your funding fee. So I hope that answers your question.
We got another.
How long after foreclosure can they purchase with a VA? Oh, you know what? I believe it is 7 years for a VA loan. Let me double check on that and get back to you. Cool. You're a quick typer. You already responded. You're welcome. All right. Very cool. Any other questions? Also for USDA, that loan process is typically a 45-day loan process. They have their own underwriting that they have to go through. We have USDA underwriters, but it's an additional layer of underwriting. So we typically call for an extra 15 days. They have their own underwriting automated system that we have to run through called GUS as well. So just keep that in mind. Can you do a 30-day close with VA? Heck yes. Yes, we can. We can. Now the VA loan, the main concern with that could hold you up ultimately is the appraisal, because that appraisal has to be underwritten by the VA's office. But as long as you get your notice of value for that, and those have actually been coming back pretty quick. A few years ago, we were looking at easily a 10-day turnaround time. I got an NOV, notice of value, back after we got an appraisal in, maybe 3 days later. And I even had that reassigned. It was from another lender. We had that reassigned within a day as well. So they actually moved very quickly. I was very impressed.
Okay, here's my coaching moment. If that was my client, Evelyn, what I would consider doing is instead of waiting till after the inspection to order the appraisal, I would have your lender order that appraisal as soon as you go under contract and try and get that inspection done at the same time. Because lots of times, you know, we ask the lender to hold off on that appraisal until we know the inspection. So would you not agree, Geneva, that if
you're looking for a 30-day closing, definitely order the appraisal as soon as possible.
Yeah, don't wait until after the inspection. I mean, yeah, you may lose a little bit, but you know, rather do that if you've got to close in 30 days. So I'm going to mute myself and be quiet again. Sorry.
Any other questions? Oh, something interesting for VA. If you have a VA buyer, or if you are a VA buyer and you do not have a credit score, meaning you never opened a line of credit, you still have loan options. We have a no credit score VA underwriting exception that is being used currently. So very cool.
I'm sorry, and that was actually Elise who asked. Go, Elise. Yeah. We will close you, and she will close you in 30 days, Miss Elise Weber. What? Can you explain that again? Because that was over my head.
Yeah. So for VA loans, I believe only VA loans, we can do a loan for a borrower who does not have a credit score.
Wow.
Yes.
Wow.
Yep.
I guess they're too busy over there fighting and saving our country. They thought maybe they would give them a break, right?
Well, yeah, I think that's kind of the gist of it, is not being in the country and establishing credit. So, yeah.
That's awesome.
Very cool. All right, on to our next one. Uh-oh. Oh, I'm sorry, that's all I had. I thought I included something on here for the bond loans. I'll just talk about that real quick. I think I might have deleted that slide. So for the Florida bond loan, yes, that is definitely an option. The bond loan has changed. And a common misconception is a bond loan technically is a second loan. So it is an FHA or a conventional or a VA loan. And what they do is they give you $7,500 if that is, can you use several different down payment assistance programs towards your purchase? Yes and no. There are down payment assistance programs that you can stack. However, your combined loan to value still has to be in check for the different investors, so to say. So it's a case-by-case scenario. I wouldn't go across the board and say, yes, you can do multiple down payment assistance programs together. But yes, I have seen it done before. I hope that answers your question. So the bond loan, I gotta be honest, I don't like it. And I only don't like it because the interest rate is so stinking expensive. I mean, I've done it time and time again where I go and I look at what the interest rate is for that same buyer who wants to do a bond loan. I look at them and I quote them for an FHA loan. And I go and then I pull up on their e-housing website what the bond interest rate is. And time again, it is at least 1 point higher. So if you're paying 4.5% for an FHA loan, for a bond loan, you're now paying 5.5%. Yes, it is saving you money, your immediate out-of-pocket expense, but for buyers who do not need those funds, for the buyers who are just wanting or looking for those funds, 9 times out of 10, once we start talking about the numbers and what that does to your purchase price and to your monthly mortgage payment, time and time again, we realize and we come to the same conclusion that it's not necessarily the best option for them. But there is a time and place for it. And I definitely have clients where, they do not have the funds available for a down payment. And this is the best option for them. And we'll have to look at, refinancing them later on to get them out of that high interest payment. Or maybe it is what it is and, they're comfortable with their mortgage payment, but maybe it just changed or declined what their buying power is because of that higher interest rate. But whatever that may be, if that's a scenario that we have to use, we're definitely prepared for it. But ultimately, I do like to show my buyers how it might make more sense for you to go through just a traditional FHA, VA, or a conventional loan instead of using the bond. Not that I'm saying we won't do it, but just I think there's better options.
Well, I would say that, the old, gosh, you sound like an old person. Back in the old days.
Old bond. No, I agree. It used to be, what was it, $12,000 or $15,000?
15,000.
Yeah. And that made more sense. That covered all of your closing costs. Every single buyer I was working with, when they were using this bond loan, they did not have enough closing costs. And not 9 times out of 10, but at least half of the time when I was doing this older bond loan, that $15,000, we were having to go back and apply it towards their principal. So we were then lowering what their actual mortgage amount was by a couple $1,000s or, $1,500, whatever it may be, to be able to use all of those funds that the bond was allowing them. So it used to be a different scenario. Now the $7,500 bond, it affects people's payment a couple $100s a month. I don't know if that's worth the $7,500.
And
I'm sorry, what was that?
don't you have to pay it back?
You do have to pay it back. It's the same as the old one. You have to pay it back if you move before 5 years. Yeah.
I thought like no matter what, now you had to pay it back. Maybe
they have grants that you have to pay back, but the Florida bond loan, no, you do not have to pay it back.
Gotcha. But the rate is much higher.
It is. Yes.
So, yeah. It used to make sense because when we used to do it and it was 15,000, you really would grasp at the end of 5 years $7,000, $8,000. Now what you really have done is rolled that cost in. So yeah, I agree. I used to be the biggest, as you all know, the biggest bond fan out there. And now I try to discourage, if we can, go in another direction. So.
Yeah. All right, that is all I have for you guys for my presentation. So let me see.
I think I can just take it back.
All right.
Ooh, look at that. I could make anybody. We'd really start freaking people out and start showing their screens. Okay, I'm going to take it back to me. And we're going to be here, and I'm going to share the screen. So this is where I am. Now, Geneva, if you could do me a favor, since I'm going to keep you on, if that's okay.
Sure.
Will you watch the chat screen and ask what, tell me what questions are out there, because I'm not quite as young as you to be able to
Sure.
multitask. Awesome. Okay, so I'm going to minimize this so I can read this. Can you still see the steps in home ownership?
Yes.
Great. Okay, so we passed the phone number off to our handy dandy favorite lender, and she has gone through, and I would think that you would all agree that by the time she is finished, our clients are pretty educated on the financing. Personally, myself, keeping my mouth shut with that being my background is probably one of the most difficult things. But once I can be partnered with someone that I know knows these things, it allows me to kind of not have to worry about it and let them do. And basically, she comes back and says, okay, this is where they're at. This is, and I love when I hear a client is pre-approved up here, but they want to stay here because they want to keep their payments, because both of us come from a foreclosure background, and that makes my day to know that, you know what, they could get this, but we're going to get this. So we know what the pre-approval is. So that's when we start looking at homes. Okay, and so when we start looking at homes, what we do is I usually do a webinar such as this. We have, and like I said, mentioned earlier, right now we have Evelyn, Lynn Padilla, Elise, I can look, Jenny, if I'm missing one of our realtors who are on right now, let me know. But we have 12 in our office right now, and we're growing every day. So, and I'm going to let them talk as we get further along. But for myself, I will do a webinar or have them come in, and I like to show them the back office so they understand what we're looking at. And you usually will get, everybody wants to go to realtor.com or God forbid Zillow. Please don't ever tell me you found a house on Zillow, because those programs traditionally run at least a day behind. So in this market, if it's a really great deal, you've got to get it immediately and get it to your realtor and get in there, because things are going off. I mean, I had a listing that went under contract within 3 days. So, just this week. So nothing that is actually, of a great value is staying on very long. So what you do is your realtor will send you, go into their MLS, and they will set you up a search. And you go through all those, and you can like them with a little light bulb, or you can heart them with a little heart. And your realtor can see that on the back in theirs, or they can send you their website. And if you save a listing, they'll see that as well. That lets us know what you like. It also gives us an idea of the type of homes that you like. Once you go through and you get rid of the ones you don't and you like the ones that you do, it's a good idea to probably kind of let your realtor know what days you're available so they can block out, especially in this market. We've got a couple of, at this point, it's hard for me if someone says, okay, I want to go next Friday, and they fell in love with a house that just went on the market. Be prepared to kind of be flexible, because we do have a major shortage in the market right now. So I wanted to keep you on this. This is a perfect time, because it says the houses that fit your criteria, and to be realistic in your budget, do not pick all the houses at the top of your price point if they have an HOA or CDD. So Geneva, do you want to kind of explain why I would say something like that?
Yes. It depends if we've include that in your payment or not. So if we know that you're looking for those types of houses that are in the areas or in the condominium or I can't think of the word right now, in those areas that an HOA may apply or a CDD may apply, that could really affect what your purchase power is. And sometimes those can be pretty steep. I have a buyer who was very shocked that what a $300 a month HOA payment did to his purchase power. It can be very shocking and very heartbreaking. So if we're not prepared for that on your pre-approval and those are not being included in your budget, that will dramatically decrease your purchase power. So we either need to not be looking at our top of your purchase price maximum, or we need to make sure that's included in your pre-approval.
And that goes with, sound like a commercial. I feel like I'm echoing.
You are.
Okay, I don't know.
Oh, there you are. There you go.
Okay. It sounds like a commercial, but this is where it's really important to have a realtor that works, well with your lender. I will give, obviously, the lender, Geneva does part of our Heroes Housing, so she contributes towards our closing costs. And that's a pretty workable situation. If you have another lender, that's great, work with them. But, you want to make sure that your realtor and your lender have a pretty good working relationship, because while we're out showing homes and they're liking houses, we're having to be able to go back and forth and, make sure, okay, so they're approved at 1,500, but we found a house that is, 50,000 less than what you said, but it's got this much. You've got to have somebody that can work with you. And you also want to work with a realtor that has experience in that. And, that's one of the things that we really coach our realtors on and educate them on. So just make sure that, when you are out there searching, I would never recommend, going out there and doing it yourself. Even myself, I could never, my husband took me to the boat club because he thought I was this great negotiator because I do it for a living. And I didn't care what that guy told me it was going to cost. I was buying it. So, you can't, it's really great to have a third party person negotiate for you because they're unbiased. They're working towards their goal, but they're not going to show their cards. So, but your realtor working well with your lender is a really important thing. So now we're at the point that, we're out. We found a couple of houses. You sent me 7 houses. We're going to go look at the house. There are some things that you need to consider when you're doing this, and that would be like the age and the condition. We were going to have an inspector on here, but I think just like Geneva had said about having Sonia come back and discuss credit, we are going to have our inspectors come back and just kind of go through the inspection process. I'm very familiar with the inspection process as Geneva as well, but I just definitely, you've got to hire a professional home inspector. They also need to be prepared. That's kind of an outside closing cost of about $300, depending on the size of the home. But if you walk into a house and that roof looks like it's older, or we find out that the AC is at the end of its useful life, you need to consider those things when we negotiate, because we may need, if you're going FHA, there are different criteria. Would you not agree, Geneva, between a conventional, what a home would look like that's accepted by conventional versus FHA and VA? They have the FHA appraisal, they have a VA appraisal. So they are looking, they're not going to accept, which is only in your benefit, they're not going to accept, roofs that may be older, plumbing that may be out of date, air conditioning units, and so forth. So when you are out looking, that's one of the things that we will, if it's a house that really interests you, we're going to get the seller disclosures. We're going to find out the age of the roof. We're going to find out the age of the AC, and, you kind of, sometimes you go through a couple of them, and just depending on your personality, it's a checklist, what are your wants? And that would be definitely something that I would look into before you ever even start. You want to have a list of your likes and dislikes, and, kind of be prepared for that. But sometimes you walk in and that's it. That's it. You know it. It's, you love at first sight. So we are walked in, we fell in love with our house, and we're getting ready to make an offer. So, like I'm saying in here, how you present an offer changes in every situation. If it's a new home in the market or recent price reduction, you may not really want to lowball. I particularly, negotiating is like my most favorite thing to do in the whole world. And I would like to, what I do is go in, I pick up the phone and I would call and let's find out, where they stand. You can always tell just by the tone of their voice. I would not just throw a blind offer at somebody. So you make an offer, they come back, use the initial docs, the seller initials docs, you play that game back and forth. You figure out what the lender says you may need to get. And that's when, like I said, having a realtor is very important so they can negotiate it. So you get the offer accepted. And the first thing we do is we send that offer to our lender. We send the offer to the title company and we order our home inspection. First thing you do. When you make an offer, you need to put a deposit down, just like with anything else, like Geneva mentioned earlier. You're going to want to put a deposit down. I'm not a big $2,500 deposit. My goal when I work for you is to get the lowest deposit, especially VA, because we're trying to, you're not supposed to have to put money down. So we try to negotiate, $1,000 to $1,500 if we can get away with that. But you have to make that escrow deposit within 3 days of the executed contract. So you keep that in mind. You have to have that available so that you have to do that. So we are under contract. We call the next day. We either wire, send a check. We get that money over to the title company and we order the inspection. Your realtor will probably give you a list of ASHI inspectors that you could use. So you make sure that you can try to be at that inspection. If you cannot be at that inspection, have somebody there for you and make sure that your realtor's there, okay? Because you want to know the inspection is going to go through and tell you you have two things in your inspection. You have your inspection report, and that is where the inspector is ripping your house apart so that we can then start trying to negotiate some repairs or some sort of money towards closing. And then you have what you call the 4-point, and that's what he gives the lender. Never ever, I don't care what the lender says to you, you do not give your inspection report to the lender. That inspection report is for your eyes only and your realtor so that you guys can negotiate, have a good idea. If you want to cut bait, because you have 10 days in our contracts that we write, we do as is with the right to inspect. So at 10 days, we can cancel. So the inspector, you want to order it immediately because you don't want to order it and day 8 have the inspection and find out that you need X, Y, and Z fixed and you've got to call to find out the cost. Order that inspection the very first day. Try to get it within the first 3 days, because wouldn't it be nice if you could get the inspection the day after you've got your contract accepted, find out that it's a house that you don't want and have never even had to make that deposit. In my perfect world, it would work that way. So if you're going to walk or if you're going to move forward, you can get that appraisal ordered. We do not like to order appraisals until the inspection's done because I don't want to waste your money. So that's why we're saying unless you need a VA appraisal within 30 days, then you need to order it. So we get the inspection done, and then we need to negotiate repairs. So, you're buying a house as is. You can't nitpick every single thing, but some of the majority of things that need to get done, we can ask. Now, remember, they can always say no. It's an as is with a right to inspect. That's the contract that we write. There are other contracts out there. I personally believe that it's better. That's a better one for both sides because you could not like a light switch the next day and change your mind. So we can ask for repairs. I like to ask for money to be set aside towards your closing cost because then you can have money to do these repairs yourself. We don't know who's doing the repairs. We just had a closing last week where The seller was supposed to redo the floors, and it was atrocious, the job that was done. I would rather let you guys get the money so that if they contribute that, so say it's $500, they contribute that towards your closing costs, so you have $500 more in your pocket after, and you can do those repairs. So then, obviously, you need to keep cooperating with your lender because that is always nice. They're going to ask you, and sorry, Jenny, this is nothing personal, but they're going to keep asking you for everything under the sun. And
we like to say we ask you for everything except your firstborn.
Yeah, and
or
sometimes
including your firstborn.
I don't know, sometimes I might let them have my firstborn. Just joking. But yes, no, you do, and don't get mad at your lender. And this is, this is where, and I hate to say it, I used to be, my previous job before as a realtor, I audited files. And if anything was not correct on that file, that lender, I audited the underwriters. That lender would have to buy that loan back. So your loan officer isn't just being a pain in the neck or being really nosy or just trying to ruin your life. They're trying to not have to buy that loan back and hold that loan. Lenders, they close on the loan, and then Fannie Mae, if it backs it, they buy and then give them the money back to be able to go get something else. If they have to buy that loan back, they're stuck with that. So don't take it personal. That is their job. My screen sharing just paused, and I'm not sure why. Hold on. Okay, it's back on. Okay, so we did everything the lender asked. Now we are going to get the final numbers. This is really, really important, people. Okay? There's a couple of things that they send you that if you don't do this, you have no one to blame in the entire world that you're not closing on time but yourself. You have to accept the appraisal, and I could be wrong, Jenny, jump in at any time. And you have to they have to send you those numbers, and you have to acknowledge. Geneva, how is it that they acknowledge it now, the 3 days
We
before?
send that for them to sign it electronically 3 days prior to closing. We're trying to send those out much further than 3 days. We try and send the appraisal acknowledgement out once we get the appraisal. So it's not typically an issue. But with that being said, a lot of times title fees change, and the day that you close changes the interim interest, and numbers change. Maybe there's a reinspection needed for your appraisal, or termite inspections done because there's termites that are considered. So whatever that may be, and those fees change, we have to send you, and regardless, before any sort of closing, we have to send you what we call a final closing disclosure at least 3 days prior to closing, and that has to be signed electronically.
Okay, so I hope everybody hears that, and I hope we're all super duper duper clear, because I talk about it in every meeting that we have when we have the client. It is your responsibility. When she says to open that up, that doesn't mean go out to dinner and you're going to do it when you get home, because when you do it when you get home and it's 12:02, you just pushed your closing back a day. That is like, there is nothing around that. So I think I emphasize that enough, but it's really, really important. You're going to get that 3 days, and again, that's part of that foreclosure crisis and how they change things, but that is really, really important. So just make sure that you do that. So now we got it 3 days before. I always say send it over to me because I'm a weirdo and I like to review numbers for you. But know that the day of closing, let's get that thing scheduled, closing like at 10, because we want to do a final walkthrough right before you close. We don't want to do it the day before you close. I am actually getting ready to list a house that was closing 6 months ago, and she was selling it for sale by owner, and she's a dear friend. And her husband went by the night before they were closing to get some things out of the house, and the house was flooded. Okay, so now they've had to take it, cancel the deal, and take it off the market, redo the entire house. And now she's like, I am not doing this again. Here, you're listing it, and it goes on. Beautiful house, by the way. it goes on the market next week. With that being said, if that person had not gone through a walkthrough, they would have closed on that house with a completely flooded house and everything would have been ruined. So you want to know that right before you walk into that closing table and you sign the docs, the house looks exactly the same as it did before you did the inspection, or when you did the inspection. If you require inspection repairs, mind you, it is up to you and your realtor to check on those repairs a week before. You don't want to check on your repairs the day of closing. You don't want to do that, because if it's not done, you've got a problem. Your final walkthrough is not to check repairs. Your final walkthrough is to say, this house that I'm buying is still in the same condition. I'm good to go and I'm ready to go. So you go through the final walkthrough, you sign your final walkthrough papers, and then you're at the closing table. Woo-hoo-hoo. It's really not that exciting. It's just I don't even know, Geneva, do you have any papers? It's hundreds of papers that you're signing. You are going to re-sign your loan application again. I don't know why, but they make us do it. You're going to sign that you signed.
Don't scare them. It's not 100 pages. It's quite a bit, but
It's
not
quite
100.
But it's silly papers, and just understand that there's a reason that they have all these silly papers. You're just going to be there and you're going to sign and you're going to sign. And at the end of signing, you get the keys to your home, and it's going to be the most exciting day ever. And then you are now a proud homeowner. Woo-hoo-hoo! Penny signed her name 35 times. That wasn't so bad. Oh, here we go. She said, Elise said that Miss Penny signed her name 35 times, Geneva. Was that the other day, the closing y'all had?
35 times.
Aw, she's so, that, I was enjoying listening to Penny. I never got to meet her, but she seemed like a sweet lady.
She is.
I appreciate everybody. I know that we went a little bit further than we thought, longer than we did. I want to thank everybody. Listen, Sonia, we're going to do a webinar with you just on credit, probably next month. That would be really great. Again, Evelyn, I want to thank Lynn. I want to thank Tanya. I want to thank Elise. These are realtors in our office. I appreciate you guys logging in. I will have y'all, everybody's information logged in. If anybody wants to say hi, you can raise your hand. We are at 8:30. You know, our office is Excel Realty of Florida. We've got a great staff of realtors. And someone just said something. What did they say? Oh, thank you, Miss Tanya. Tanya's a new realtor in our office. And hopefully this was really educational for everybody. You guys have a great night. We will be sharing this. I'm going to put it on our YouTube. And if you want to share this with anybody that you think this could help educate in the buying process, we really appreciate it. And you guys have a wonderful evening in Geneva. I appreciate all your education, and you guys have a great night.
Thank you. Thank you for hosting it, Scarlett. Bye.
Bye.
Good night.
Good night.